Welcome back. In a moment, we will talk about important things regarding Bitcoin and other assets. But before getting to them, I want to say a few things about the market. Especially, I want to answer the question you see in the title. How will the year 2026 be for Bitcoin and crypto? Now, regarding 2026, everyone from individual investors to experts, and even banks, is split in two. There is one group, those who think these are high prices, that the bear market will start or has already started, and that it will fall further. Of course, just like those who think positively, those who think this way also base what they say on logical data or historical realities. What are those historical realities? For example, they say that when we look historically, the periods between general elections in the US, meaning midterm elections, are always bad for markets, and we are in such a period now. Our strategy is that, yes, Bitcoin, Ethereum, maybe I don't expect a much bigger drop, but it might go boring and sideways. But we don't have the luxury of missing this move. We don't have the luxury to miss. If we miss it, our years will be gone. If you expect lower prices and distance yourself from the market and miss the right place, which is highly probable, you will bang your head against the wall for years. Do you want to risk this? Yes, you can try to time the market like the exchanges that see your every move, like funds with hundreds of millions of dollars, like algorithms, like those with media power. But if you miss, you will lose years. This strategy won't make you right immediately. Maybe for a few months, maybe for more than a few months, you might remain wrong. Let's look. There were midterms in 2014, and 2014 was a bear market. There were general elections in 2016. Then there were midterms in 2018, and in 2018 markets were not good. Then general elections happened in 2020. Biden won in 2020, and then between 2020 to 2024, the 2022 midterms, again, 2022 was a bear market. Midterms were always the places where bottoms were seen. And now, again between two general elections, there will be midterms in 2026. Midterms have been bad every time so far. So why? In midterms, the House of Representatives, a part of the Senate, and state administrations are voted on, meaning between presidential elections. Generally, the reason these periods don't pass well is that the presidential election is already over. The winner has won. There are 2 years until the next election. A new administration is established. There is no pressure to be re-elected. Not much new budget is written. Not much pressure is applied to the Fed. The Fed can stand in a tight position more comfortably. Besides this explanation, another argument of those expecting a decline in 2026, especially in the first half, is that according to the 4-year cycle, 2024 should be the peak year. On the other side, those who say 2026 will be good for Bitcoin and crypto, the positive thinkers, say that the 4-year cycle is now broken. Their argument against the midterms is this. They say these midterms are different because Trump is different from other presidents. Unlike other presidents, Trump is not a man compatible with the system. He is constantly in a fight with the Fed, with institutions, with something. The environment is already chaotic. His ideas and the things he wants to do are generally unpopular things. Also, if he loses the midterms, it will become difficult for him to pass a new budget. Everything he wants to do already causes a huge reaction. He won't be able to realize any of his radical ideas. His hands will be tied. He will be paralyzed in the full sense of the word. That is why they believe he needs to heat up the markets. Otherwise, Trump will constantly face obstructions. The second reason for positive thinkers, let's come to the Russell Index. Look at the peak here at the end of 2021. Do you see it? The peak date is the same as crypto. Maybe it even follows a bit ahead of crypto. Why do those who think 2026 will be positive follow this index? What is the deal with this? Because this index contains small-scale US companies. Only small companies. We can even remember this index like this, the world's biggest small index. This means since they are in the small and risky asset group, They are one of the asset groups most sensitive to liquidity. If the Russell 2000 index broke upwards, it means risk appetite in the market is increasing, meaning crypto is next. So, the negative thinkers think that there are midterms, that midterms always pass badly for markets historically, and on top of that, yes, the Fed started bond buying, but these are only $40 billion monthly, not a huge monetary expansion. So the market will go badly until the second half of 2026. While the positive ones believe that Trump is not a compatible president, that he is extraordinary, that he came with a fight, that he needs to heat up the markets to pass his radical ideas. As you can see, there are places where both sides are right. My strategy has been, for a long time, before the interim rally at the end of 2024, not that everything will rise or everything will crash. Bitcoin, Ethereum, and quality projects will detach. We are outside of the sides. Our side is always gray, because the world does not consist of black and white. Because whenever you choose a side, positive or negative, and the darker you become on that side, the less you start seeing the realities in the world. If we constantly think positive, 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 we close ourselves to the bad sides of the market. We take aggressive risks. If we constantly think negative, 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 we can't make any money from the start. We will digest these views, take the places where they are right, and create our own strategy. Now, is this newly starting period monetary expansion or not? In 2020, monetary expansion started. The world economy had stopped completely, and the Fed bought bonds to fix the budget deficit. Now, the Fed had three solutions. Allow bond markets to break, but this is a huge disaster. Loosen bank regulations, for example, changing the leverage ratio. Stop quantitative tightening and increase reserves again by tolerating inflation. Of course, the method being applied right now is the third method. What does this mean for assets? It means banks shouldn't sell bonds for cash. If sales come in bonds, if demand for bonds drops, and interest rates rise because there is no demand, the state starts borrowing at very high costs. The final buyer, the last resort, becomes the Fed. Instead of that, the Fed now says, I am doing technical adjustments, not monetary expansion. It buys $40 billion of short-term treasury bills every month, meaning it doesn't say monetary expansion, but it prints money and buys. It buys from banks. Banks' balance sheets relax. Their leverage drops. They get cash. This process relaxes the market in two ways. One, it reduces leverage pressure on commercial banks. Two, since the bond market relaxes, the Treasury can sell new issuances easier and with lower interest. Unlike the monetary expansion in 2019 to 2020, the monetary expansion we are currently in is more gradual and spread out. So you might ask, if monetary expansion won't be fast, if it will be slow, does this limit the upside potential of financial assets? The critical point here is this. Asset prices may not always match liquidity conditions. Yes, inevitable in the long run, but in the short and medium term, what determines prices is sentiment. It is the agenda of the world, the stories. I think the rise of assets like Bitcoin and gold in such an environment will be in the form of a climb, spreading slowly over time. But the rise in gold was not a CPI inflation source trade. Is that what they tell you? No, it wasn't. The gold rise was a sovereignty independence move by both people, institutions, and nation-states. Countries trust the US and the US dollar less. They are not buying new bonds. Instead, since 2009, especially after 2020, states are accumulating gold. The reason is very simple. If your reserves are another country's bonds, and that country can freeze your assets with a single move, can you really be sovereign? That is why gold adoption is increasing at full speed. Bitcoin's rise when there was no monetary expansion was also because of this. I think Bitcoin will overshadow gold's performance in the near future. Finally, what kind of strategy should be followed in 2026? Primarily speaking for Bitcoin, for me, instead of expecting low targets and missing out, which is very likely for you to miss, and banging your head against the wall for years, it is most logical to be positive when no one is here and no one believes. Maybe be wrong for a while, but multiply your money effortlessly when the broken clock shows the right time. Pessimists, I have seen it many times. Yes, they can look right in certain periods, but in their mistakes, they lose years. Because big rises in the market correspond to a very, very small slice of the market. Look at Bitcoin, uranium, silver. Congratulations to those who held silver. It is not rocket science. They bought when people were not interested. Maybe they looked wrong for a long time, and then they evaluated the rise that happened in a very short time. Those who were in the right asset can stay wrong for 3, 4, 5 months instead of timing when people are not interested or afraid. Of course, for this, their belief must be strong. And when we look at history, the same thing always happened. When the broken clock shows the right time, they multiply their money. Thanks for listening.